Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. Founded it 22 years ago, way back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and my personal passion, which is mechanical trading systems. Anyway, it's been about a week since I did a YouTube video for you guys, so that's what we're going to go ahead and do tonight. This is our back-end recorder for our website subscription service. Again, if you're not a subscriber, you're just on YouTube, you're missing out. You should consider subscribing. There's 5 detailed newsletters per week, actionable trade ideas, access to mechanical systems, an active trading community, you name it. Anyway, I'm going to get this recording started right now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, May 28th newsletter. First off, as you know, guys, it's been about a week since I did my last newsletter. Last week, I went out of town. I actually went to Florida. I went to the Wall Street conference. I was actually given a free ticket there by one of our subscribers, and that was a pretty cool experience. A lot of big wigs there. I was a peon. I mean, they had all kinds of people from CNBC. They had Roger Stone giving a speech, General giving a speech, Alan Dershowitz, all these different companies, a lot of rich folks, a lot of, made some contacts, etc. So anyway, again, like I said, it's been about a week since I did a video, and Steve Nelson, of course, kept you all in check. Anyway, this newsletter, as you can see, divided into 9 major sections. Got a lot to discuss tonight. By the way, guys, so as you know, the market pulled back over the last week, and we've been viewing that pullback as a wave 4. And quite funny, tonight after NVIDIA earnings, futures popped huge. So ES futures are up 90 points. So some news came out that said Trump doesn't have the authority to set Liberation Day tariffs. And so, of course, futures had a huge pop on that. Again, it's funny how it was already in the chart. We were looking at this as a 4th wave pullback. We were looking for a rally for another high. So it's kind of funny how it's almost always in the charts first, and then you get the news afterwards to justify the chart. So you can see here's an image of 15-minute chart of ES futures, and you can see here after hours, futures were trading just slightly up, and then boom, big pop here after hours. Like I said, currently ES futures are about 85 points. They were up 91. All right. Anyway, let's go and move on. So image number 2 below, here's an image of the daily S&P 500 cash, and I have the 15-minute overlaid on top. All right, so again, this is how I've had it labeled. This wave 1, 2, 3 on the daily. We reviewed the pullback over the last week and a half as a wave 4. And we were down a little bit today, and then, of course, futures are way up this evening. So it looks like we're going to get that, unless futures completely reverse overnight, looks like we're going to get that pop up tomorrow, take out that last high at 59.68, and work on that 5th wave high. Once this initial 5th wave move up off the April 7th lows is over, I'm then looking for a deeper ABC pullback. Okay, but for now, it looks like we're working higher in that wave 5. You can see on the 15-minute chart how you had a perfect little 3-wave pullback into the 38% fib. Again, ABC, and like I said, should get that gap up tomorrow in the cash market. Next, let's talk about some admin things on the website. Let's talk about the mechanical systems. First off, I sent an email to the subscribers. The SPY breakout system from the mean reversion system went long about a week and a half ago, and that's still long. So anyone following that should be doing quite well. I'll keep you posted on that as the stop continues to move up. We should see the stop move up tomorrow, and if it does, I'll email the subscribers and let you know where the stop is. Otherwise, again, systems here have been doing well. This table shows you the KISS high performance systems. And again, I separated this by the current profit, but guys, if you stuck with the high performance KISS systems, you've done well. Yes, I know there was some bugs here and there. Last week there was a couple bugs because when I was out of town in Florida, my computer at home crashed that runs the systems, and I had to get it back working remotely. So the systems, the data got screwed up for about a half a day. But again, my suggestion, just be patient. And if you've been patient with the systems, you've done well. Look at these gains. Tesla 130-minute systems up 42.8%. QLD's up 37%. The 78-minute NVIDIA's up 29%. You can see I got two different Tesla systems. UPRO 60-minute systems up 26.7%. Again, very nice gains here across the board. So while some of these index related ETFs had a couple whipsaw trades in February and March, they've all come roaring back nicely. And that's the thing about trend systems, guys. You have to stick with them long enough, you know. Trend systems, the way they tend to work, they'll take some little losing trades and then they'll catch a big runner, and that runner will erase the losses of two or three losing trades or more. So that's why you need to stick with them long enough to play out. I know a couple of guys that gave up on the KISS systems in mid to early April, and so they took some of the losing trades and they haven't been able to participate in these nice winners. Okay. The one thing I'm going to do on the KISS systems, guys, I'm going to start to try to do a bi-weekly video update and give you my thoughts on various sectors and what to focus on. So I think having some nice interaction from me will be a welcome thing. I'm also going to break up, instead of having one big table here, I'm going to break it up into various sector tables. I'm going to have one for the US indexes. I'm going to have a world index table. I'm going to have a crypto table. I might have an AI table, precious metals. And I think that'll help keep folks focused on areas that interest in them instead of just having one big table here. But again, systems have done very well, as you can see. Next, image number 4. So here's one of the things I'm going to add to the KISS high performance systems. And again, I'm going to be doing an update on this to give you, more detailed update. But so sometime soon when you go to the high performance KISS systems, instead of seeing the one big table, there's going to be a cover page here, and you're going to have the systems broken down into these smaller tables. Like there's going to be a US index table, there'll be one for the world markets, there'll be one for commodities and precious metals, one for crypto. I may add one for AI plays. There's going to be miscellaneous, and there's going to be inverse ETFs. Yes, we have the inverse ETFs done as well. That said, we need to test that. So we got to turn it on for ourselves first, and I want to make sure they're issuing the orders. But that'll be coming as well, and that'll be a welcome addition. So when the markets do have corrections in the future, instead of, the KISS systems are long only, that'll be nice to have some of these inverse ETFs that the systems can catch. The inverse ETFs for the high performance KISS systems are going to work quite different. So the KISS systems, as you know, you're used to the system alerting you and you simply go long at market. The inverse ETF high performance KISS systems are different. They all enter on buy stops. So there's going to be an initial trigger that says, hey, SPXU or SOXS is looking for a trade, but it doesn't enter. It then gives you a buy stop price where price has to go above for it to trigger. Okay. And that's important because sometimes they won't trigger. You'll put a buy stop in, price never hits that buy stop, and then the trade ends up getting canceled. What ends up happening is the buy stop ends up filtering out some potential whipsaw trades. Again, I'll explain all that more in a future video. And finally, image number 5. So I know there's a lot of discussion about the high performance KISS systems, but guys, even just the standard daily KISS systems have done extremely well. Okay. Remember, we follow 750 stocks and ETFs. So here's a couple tables that I picked randomly from a couple users. These are their favorites. These were emailed out to those individuals today. Okay. Again, if you're using the KISS systems, you're used to receiving these daily email updates. Again, these are not the high performance KISS systems. These are just the standard daily. But look at these nice gains on just these standard daily, right? I mean, even just QQQ daily, it's up 9.7%. That's up a lot more than the market is this year so far. Market's just getting back to being up a little bit, SSO is up 14.46%. TQQ is up 21%. So again, guys, even if you're not using the high performance systems, the standard daily systems, which there's 750 of them, are a very good tool and they've done very well. And finally, I'm going to be doing a video on platinum metal. Okay, I put together some slides and some charts. So I'm going to do a separate video on this, but my feeling is that platinum metal is a good long-term buy. Okay, like this slide says, platinum is ready to rock. Severe supply and imbalance, demand imbalances that have persisted for the last several years, where there's about a 2 to 3 million ounce demand, supply demand imbalance over supply. Basically, the price of platinum has fallen so much over the years that about 20 to 30% of the mines have shuttered. And so they've shuttered because it's more expensive for them to mine platinum than it is for them to sell it. And but demand has been increasing. And so eventually, remember, with commodities, long term, they move on supply and demand cycles. And so eventually that's going to catch up. Plus, the chart looks pretty good. I think platinum could easily go up 50% to 100%. And so I've been accumulating it, and I'll be doing a separate video on that. And finally, image number 7. So here's a weekly view of platinum. You could see last week it busted out of that coil nicely. This week it's down about 1.25%, but beautiful breakout here. So I do think it's starting. I did accumulate quite a bit of platinum when it was in the coil. But again, I'm viewing this as a long-term play. All right, guys, let's move back to the general market at hand. So item number 8 shows the index sector table, what transpired today and this week. Again, the market pulled back today as we were expecting, down anywhere about 0.5% or so for the major indexes. The Russell was the weakest, down 1%. For the week, everything's up, and like I said, overnight, futures are way up. ES futures are up about 85 points. As far as the market sectors, again, all the sectors were actually down today. So pretty broad-based sell-off today. But again, we'll see what kind of gap we get tomorrow. Currency-wise, U.S. dollar up 0.3% today, up 0.9% for the week. Bitcoin's been pulling back. Crypto, that's had a hell of a move, so not surprised we're seeing a pullback there. And commodities, DBC, the index was down today about 0.3%. Crude oil is up 0.9%. Natural gas continues to get taken to the woodshed, down 5.4%. Weakness in copper, uranium, all these various ags, and weakness in most of the precious metals here, gold, silver, except for GDX, the miners up 1.2%. But down pretty strongly for the week. You can see gold down almost 2% for the week. And as far as the bond market, remember we were watching that area. The 10-year was up today, but it's down for the week. Next. Item number 9 shows the economic news calendar. Today we had the F1C, really not much out of that. Tomorrow we have GDP, initial jobless claims, pending home sales, and then on Friday we have PCE, core PCE inflation data. Okay, today we had NVIDIA report earnings. So let's take a look at that. And of course, remember overnight or this evening we had the news about the Trump tariffs and stuff like that. And that's why futures have popped. So here's NVIDIA. NVIDIA reported earnings after hours, and NVIDIA is up. It's not up substantially. It's up around, it's up about to 141 in after hours. So, it's up here around this, pretty close to that February high. But you can see a little potential wave count breakdown. So overall, we've been favoring a move up over time to new highs, as you can see. So wouldn't be surprised if that plays out. Next, moving on to the major indexes, chart number 11. Here's the Dow. So over a week ago, stalled at that resistance supply area. I've had this labeled as a wave 3. So you have the wave 1 up from the April 7th lows. Then the higher low, wave 2. The net impulsive move up is a 3. The pullback over the last week and a half is a wave 4. Well, likely tomorrow, as long as futures don't completely reverse, we're likely to see new highs in that wave 5. Next, chart number 12, here's the weekly view. Remember, perfect bounce off that big support on that April 7th low. Just textbook. You can see the supply zone is just above, so maybe we make it up into that area. Next, chart number 13, here's the daily S&P KISS system. No changes here either. Smart trailing stop still there. System went long a few weeks back. The high performance, some of the intraday systems like the 78-minute went long essentially on April 7th. So they caught hella good entries. But otherwise, daily's doing just fine here. And maybe we'll see the stop move up tomorrow with price. Chart 14, here's the intraday time frames we like to look at. Again, we've been holding the ATR on most of these time frames. As you can see, again, we're likely to get a gap tomorrow, so I'm not going to spend too much time on that. Next, chart 15, here's the standard daily S&P. So just like on the Dow, you have the same wave count, 1, 2, 3. That pullback over the last week and a half is a wave 4. Notice it came down to the 200-day moving average where it found support. All right. Now we'll see if we can get that move to take out that recent high at 59.68 and work on that wave 5. Now, once we get into the wave 5, once that ends, I am then looking for a deeper ABC type of a pullback. But for now, we remain in this uptrend. Next, chart 16, here's the weekly view. Just shows you how we bounced off that big demand zone on April 7th. Just perfect. And we're stuck in this little supply zone. We've been here for the last 3 weeks. Chart 17, here's the half-day chart. Again, we pulled back, wave 4. We got a little bit into that gap, but didn't fill it. And we're likely to see that gap up tomorrow. Chart 18, 2-hour view. And chart 19, 60-minute view. Again, no reason to spend too much on these intraday charts with the move in futures here overnight. Likely to see a nice gap up tomorrow, taking out the mid-May highs there. And finally, chart 20, here's the 15-minute view. So again, we had that breakaway gap the other day. Breakaway gap is when there's a downtrend line and you gap above it. Those are gaps you can chase, by the way. So you're like, man, I wasn't long here. Well, when you get a nice gap over a downtrend line like this, watch the first 5 minutes or so, because many times you could just go ahead and buy that gap and you can see it was a nice trade even if you bought that big gap up. So again, we've been viewing this pullback as a wave 4. You can see the 3-wave ABC. So now resolving to the upside with the futures. Next, moving to the NASDAQ, chart 21, here's the NASDAQ high performance KISS system. No changes, smart trailing stop still 483. Maybe we'll see this pop up tomorrow on a new high. Nice entry on the system, though, from a few weeks back, almost a month ago, essentially. System went long. It's been about a month ago. Next, chart 22, here's the intraday time frames. Again, I'm not going to spend any time on this because of the move in futures. Next, chart 23, here's the daily. Again, same count as I've shown on the Dow and S&P, wave 1, 2, 3. We viewed that as a wave 4 pullback, and with the move in futures tonight, should be a wave 5. This should be a 5 here, not a 4. Apologize for that. Now, on a new high here, look for some RSI divergence. And so that will apply for the other indexes. So we should see some divergence on another high. Next, chart 24, here's the weekly view. So the NASDAQ's kind of been riding this broken channel line up. All right, but otherwise, guys, I am looking for this to make a new high. So next, chart 25, here's the half-day chart. You can see how it bounced off that demand zone the other day. And chart 26, 2-hour view. Again, likely to see a nice gap up tomorrow. Next, chart 27, here's the Russell IWM, which has been the weakest index this year, or this week so far, down 1% today, where the other indexes were down 0.5%. But again, this also has the same type of count, 4th wave pullback. So looking for this to make a new high. You know, I think this easily would test that 200-day moving average. So this could be a low risk long, probably likely to play some catch up to the other indexes. And finally, chart 28, here's the 2-hour view. So you can see it's been uptrending in this channel. We never did make it up to this little supply zone. Maybe we'll hit that area tomorrow. And that does it for the major indexes, guys. All right, again, futures are holding pretty steady here, so likely we'll see that gap tomorrow unless something changes. Next, chart 29, here's the 10-year Treasury yield. This was rallying last week, which is a concern for the market, but nice pullback so far this week. Next, chart 30, here's high yield corporate. They've led the market. Remember, they made a new high in early May, and the market tends to follow high yield corporate. It's always good to watch this, and it led to the upside, and that was kind of a like I said, a positive for the market overall. Next, chart 31, here's the VIX. The VIX has been just working lower. No changes here. Chart 32, here's the 60-minute view of the VIX. Again, we'll see how this looks tomorrow. And chart 33, here's that breadth indicator with the NYA. So last week I was pointing out this divergence, and this did end up actually producing that pullback, which we got last week into Monday. All right. Otherwise, again, we're likely to see a nice gap up tomorrow. Briefly looking at the sectors, again, nothing standing out here. Here's the XLK technology. Again, same wave count as the index is 1, 2, 3, 4. Likely to see another high move up in a 5. Chart 35, here's financials. Little pullback today again. You can see the downtrend line just above. Chart 36, transports, a little pullback today, but again, they've been riding their 20-day moving average up. The last high stalled at that supply zone. 200-day moving average is just above. Chart 37, XLP, consumer staples, kind of in this coil-like pattern, little pullback today. This tends to be a bit defensive, so if market rallies tomorrow, maybe we'll see this pullback. And chart 38, here's biotech. Overall, been downtrending here. Little pullback today. We'll see how this reacts tomorrow. You can see the main downtrend line here. And chart 39, XLE Energy. This area has had a choppy advance so far from the April 7th lows. Steve added this channel. So pullback today. We're testing the uptrend line of the channel. We'll see if it breaks the channel or it bounces off of this tomorrow. And following up on the world markets, EFA has had one hell of a move. This is essentially Europe. But look at this V rally off the April 7th lows. That said, we finally had some RSI divergence building in there. So finally getting a pullback. Not surprised, guys. This has been a crazy move, not something to chase. That said, I do think EFA and EEM could outperform the U.S. markets. They certainly did on this move. And that's why I added these to the high-performance KISS systems. But I wouldn't touch them right in here, or I'd be a little careful because they've had such a run. And chart 41, here's emerging markets. Pulling back off that resistance area. Now we'll see if this can form a higher low, maybe like a handle, kind of a cup and handle pattern, and then break out. All right, moving on to commodities. Chart 42, DBC, like I said, down about 0.3% today. So far, that last rally last week stalled right at that previous low, turn resistance. Chart 43, here's the weekly view. Of course, still stuck in this 2+ year range. Again, the reason I keep showing the weekly charts, guys, is because eventually it's going to break out of this range one way or the other. And the longer something sits in a range, the longer it consolidates, the stronger the breakout move is, the stronger it will trend. So when one day this breaks out of this rectangle range, it's going to have a monster move. So I want to catch that. But for now, it's just stuck within the range. Next, chart 44, crude oil. Up today a little bit. So far, we got a higher low here at 60.26 essentially. We'll see if that can hold. You can see the bigger resistance above. Next, chart 45, UNG natural gas continues to sell off. Again, this tends to be weak this time of year in the summer months. So, again, I have no interest in any trades here at the moment. We had a nice long trade there in April off that doji, but hopefully you took your profits. Chart 46, copper. Broke out of that tight coil last week when I was gone. You can see it's pulled back the last couple days to retest the coil. Now we'll see if it can find support off this coil and rebound. Again, that would be my favored view. You broke out, you're retesting the resistance, now turn support. Next, chart 47, uranium. This had a hell of a move, especially on some of the recent news. I know they're pushing for more use of nuclear power, which has always been my thoughts, but big move here. By the way, I'm adding uranium back to the high performance KISS systems. It's already in the standard KISS systems, but heck of a move here. It is quite extended short term. It's above its upper Bollinger Bands 3 consecutive days, so be careful chasing it now. Need some consolidation. Next, chart 48, here's uranium on the monthly. Again, one of my targets is this supply zone from 2011. So that's up there in the mid 40s. So I called the bull market in uranium back in late 2020 when it broke out of this base. Chart 49, here's another uranium ETF, URNM, another one to watch. And the major uranium stock, which is Cameco, CCJ, it's had a heck of a move as well. All right, moving on. Chart 51, Bitcoin. Again, Bitcoin's had a hell of a run from that demand zone in early April, where we pointed that out. Pretty much a straight move up to a new high. Now, I'm not showing the weekly chart of Bitcoin tonight, but we've been favored a new high in Bitcoin as a wave 5 longer term, so that's something to know, but it's pulled back here a little bit this week. Next, chart 52, here's Ethereum. Steve keeps taking off my little bear flags or my annotations here, but Ethereum here, I had this as a nice tight little coil rectangle pattern back in early May, which popped out hard. So I had that as a flag pattern, so that's why I wanted to keep this on here. Right now, you got a beautiful ascending triangle here, so this looks pretty good, guys. ETHE, there's a couple different a couple different Ethereum ETFs. So those are ones you want to keep because I think this will likely bust out. Looks pretty good. I like this. Next, chart 53, one of the crypto miners, WGMI, pulling back today. So again, we'll see how this behaves tomorrow. And chart 54, US dollar, pulled back, but you can see it's bouncing in this after hours here. It's up, and what less is up, gold is down in after hours. Gold is actually down about 30 points, while ES is up, like I said, 90 points right now. Chart 55, here's the weekly view of US dollar. So far for the week, it's up 1.25%. Below here, this is a larger demand zone. And finally, chart 56, here's the Japanese yen. So this kind of has a cup and handle look overall. All right. If this were to play out, eventually the dollar will sell off again, which I favor. But anyway, for now, we'll just monitor this. Moving to precious metals, chart 57, here's gold. So far, we've had a ABC three-wave pullback off of that 3,500 blow-off move back in April. So we've bounced off that demand zone. That said, I don't know if we're going to make a new high or not here. I still favor that 3,500 as a blow-off move that needs to be worked off. But again, we've only had three-wave pullback, so it could easily make a new high. But it is down here after hours. You can see that bounce so far stalling at the downtrend line from the highs. Next, chart 58, here's the weekly view. Again, for now, I'm leaving that wave 5 at that 3,500 area. Remember, gold broke out of this beautiful weekly base early last year. It went parabolic. I was targeting a little over $3,000 over a year ago, and my target was more than met. We had a parabolic move up, and so that may need to be worked off, but again, we'll see. Next, chart 59, here's silver. Now, silver did not have the breakout move like gold, and in fact, it's been stuck in this range now since October. So one day, silver will have its day, just like every dog has its day, but for now, it's just consolidating. Next, chart 60, here's platinum. Last week had a major breakout when I was out of town. Steve didn't show this one on the weekend, but again, I've been all over platinum. I gave the fundamental reasons. I'm going to do a separate video on it, as I said. I've already posted a ton about it on the blog, but I've been accumulating platinum here for the last few months inside the coil and consolidating a little bit this week, which is fine with me. I think long term this goes up. I think it's an easy longer term hold. Next, chart 61. Now here's the daily view. It is very extended. You can see it was outside its upper Bollinger Bands 4 consecutive days. So might need to work that off a bit, so be a little careful here. It could also try to flag out. And chart 62, here's the 60-minute view. So last week I was showing this very tight coil, and if you bought that coil, that was an easy 10% move out of that coil from the 90 area all the way up to 100. Next, chart 63, here's SPPP. I also added this to the high performance KISS system. So this ETF is 50% platinum and palladium. I actually like palladium too. So it's kind of a way to play both. This broke out last week. It's pulling back on lighter volume. So I'm interested in picking up some of this on this pullback. Again, I added this to the KISS systems, guys. Next, Charber 64, here's GDX, the miners. This was up today. So far, again, like I covered this last week, we had a 3-wave pullback. And if you bought that, you've had a nice trade so far. Now, whether it goes back to the highs or not remains to be seen. It is down here after hours with the move up in the market futures and down for gold. Some of the individual stocks I showed had the same pattern, like Newmont, ABC. Again, if you bought that ABC pullback over a week ago, you're up on that trade. And another one I was shown was BVN. It's still in this coil-like pattern. It's getting tight here. So you could have a fairly tight stop just below that uptrend line. And guys, finally, let's follow up with some of our recent trade ideas. Now, I didn't add any new trade ideas this evening, so we're likely to see a big gap up tomorrow, but we'll cover some of the recent ideas. So here's AZ. All right, AZ is up this week about 4.9%. So it continues to stall right around this $10 area. If it can clear that, I think it could pop up to the mid-teens up into here. Okay, now we held a webinar way back here in October when it was in the mid-2 range. So anyone who bought it there and stuck with it, you're up 400%. Congrats. This is my largest holding, so I'm hoping this can pop, but again, it's been a nice trade. Next, Charber 68, here's United Healthcare. So, a couple weeks ago, Steve pointed this out as a trade opportunity at the 61.8 fib, right around that 245, 250 area. If you bought that, you've had a nice trade. Next, Charber 69, here's the daily. Again, if you bought around that 250, that 61.8 fib, you had a nice trade. It's pulled back. I think this will likely form a higher low and then pop over the 9 EMA. So if you're still long some, I'd probably just put a stop here, maybe a little bit below that 289 area. Next, Charber 70, Oklo, long idea from ours a few weeks ago. Man, this has been a hell of a move. Look at this pop over the downtrend line. This sector has moved nicely. And in fact, if it pulls back in here, this has the potential to form a cup and handle. So watch for that if it starts pulling back in here. But hell of a trade. Next, Charber 71, FSS, another hell of a trade. So far, it's been stalling around that initial supply zone, to be expected. If you're still long some shares, I'd put a stop at that higher low at 91.48. Next, Charber 72, CrowdStrike. Long idea from last week. You could also draw this as a coil. Busted out last week. Nice pop this week. Next, Charber 73, Fuel Cell. This is a long idea of mine last week, and it did pop last week. And if you stuck with it, it's been a nice trade. Just a trade, though, guys. I don't view this as a swing. So make sure to keep that in mind. Take some profits. Next, Charber 74, XYZ. Also popped this week here. A little pullback today, but popped over that horizontal resistance. Charber 75, WRD, one from Steve. So tried to pop today, pulling back, but I actually own a little bit of this. I'm still in it, so let's hope we can get a little follow through tomorrow with the market. Charber 76, RR, one from Steve. It popped and then it's pulled back. That said, I would watch this pullback. Could try to find support and pop again. I don't own a position on this one. Next, Charber 77, NEOV. It's trying to pop out of this big flag pattern. Here's potential measured move. By the way, this is one I saw last week at the investor conference. I saw it when it was right around this 280. I looked at it, I'm like, man, that's a good looking chart. I actually bought this at the investor conference. So, anyway, I'm obviously in my position and I'm up on it. So hopefully we get some follow through. Next, Charber 78, REKR. Popped over this resistance. Little pullback today. Pulling back off that 200-day moving average, but the chart still looks okay. Charber 79, FUTU. Your resistance is the downtrend line. Today bounced off the 20-day moving average. This looks good, guys. So still on the longs list. Watching it. Charber 80, PERI, another one on the watch longs list, has not triggered yet. Watching this one. Jabber 81, SPRY, another on the longs list. Resistance 1550, still watching it. And the final one, Charber 82, BSX, Boston Scientific, on the longs list. Hasn't triggered, still on watch. All right, guys, quick check on futures. By the way, ES futures are now up nearly 100 points. So things are only strengthening. And so, again, likely to see that big old gap up tomorrow. All right, guys, have a wonderful rest of your evening. And again, if you're just on YouTube, strongly consider subscribing. Write into us, ask for some special offers, etc. Take care, everyone. Have a good night.